All right, as we wrap this series up, let's talk about retirement. We've been using these policies throughout our life to make us money or save us money. And now comes time for retirement. What are we going to do? What's our capabilities with utilizing infinite banking? What can we do with this? So you're going to see, you may see this in previous videos, but this example is a person who was paying $25,000 a year for about 20 years, and they were borrowing against the cash value, using it to make them money, save them money. Okay. Now, along the way. So again, a recap. Somewhere between years 2 and 4, the cash value begins growing more than the premiums on average. Somewhere between years 6 to 10, the cumulative cash value exceeds the cumulative outlay. So it's caught up with the first couple years. And then the spread throughout your entire life is there to be used. You can borrow against the policy to make you money or save you money. It is income tax free because you're going to access them as policy loans, and the IRS does not tax on loans. Now, this person has been using this policy throughout their entire life, and now they hit age 65, this final box. They've got 1.4 million accumulated there. You see the premium dollar hasn't changed from 65 to 70. We've stopped paying premiums at that point. Now everybody can choose a different year, right? It doesn't have to be age 65. But we stopped funding the policy at this point. And you see what happened to the cash value. It grew from 1.4 to 1.7. We paid no more premiums and it still grew that 300,000. Income tax free. Okay, let's take age 70 on. What happens? From age 70 all the way to age 80 over a 10-year period, it grew from 1.7 to 2.7. $1 million cash value growth, income tax free. Because of the way it's structured, properly structured, dividend paying whole life insurance from a mutual carrier. And we structure this for the purposes of infinite banking. Now what? $1.7 million at age 70. What can they do with that? Let's go over here. We either use velocity or we lose it. So I'm going to show you here. This is the illustration form of the graph we just looked at. $1.7 million over here. $590 has been paid throughout the entire life of this policy. Now this person is ready to retire. We're going to stop funding premiums over there on the left. You'll see the premiums go to zero. And then we're going to begin taking $100,000 a year income for ourselves. But it's a policy loan, $100,000 a year. And use that to supplement or be our retirement. And this person can do this for the rest of their life because the cash value is offsetting it. The growth is offsetting what they're taking out. And so you can see here the cash value declining because we're taking out a little bit more than it's growing. Okay. But this person can do this $100,000 a year for the next 20 years. That's $100,000 at 20 years. That's $2 million. So they can take out $2 million over the next 20 years, and it'll still pay $1.4 million out to the beneficiary. That $2 million plus the interest that's accrued, they will not have paid back. And it'll still pay $1.4 million out to the beneficiary in their case. That is how you can create financial velocity. We talk about this, we see life is more than accumulation of money or avoidance of taxes. There's more to it. Life is about influence. It's about relationships and making a difference. It's about being fondly remembered by those whose lives we touch along the way. Think generationally. What else can we do with this? Okay, generational wealth. I'm going to give you one example. There's a lot of ways to do this to make this intergenerational. But the big picture, one perspective is the first generation has to start it. That's you. You're going to fund a policy. You're going to get it growing and growing throughout your life. Even if your timeline is shorter, if you're older, it's not too late to start. You start something. But the first generation has to start something. Or if you cannot get it on yourself, we'll find people around you who have insurable interest, spouses, children, grandchildren, business partners, lots of options. But you have to start it. And then you're going to insure the next generation. It's like I have myself insured, I have my children insured. The beneficiary of these policies is the family trust. Okay, so upon my passing, the family trust will get funded with a big pile of life insurance money. And now that trust is designed to function as like a family banking system. So the family can then utilize that trust to borrow and use it to make the money, save the money. They should not have to go to an outside bank if they don't need to. They can go to the trust. The trust will take ownership of any existing policies that I already have ownership of. As a policy owner, you control the cash value. So if I own the policies on my kids right now, I control the cash value on those policies until one day when I may hand ownership over to them or ownership over to the trust, and the trust would control it. But this generation, once it's funded, they want to, the trust needs to go buy policies on the next generation. It's the children, the grandchildren. The beneficiary of each generation of those policies is the trust also. So upon each generation's passing, the trust is funded with a larger and larger pool of money. And the family, and however they choose to make money with it, can access that trust and utilize that as their banking system. Plus, the trust will own the policies of those who are alive in those generations. And so it'll have the pool of money we've been funding it with, plus it'll have the cash value that it has control over to utilize. And so you can see, and then how this can self-perpetuate generation after generation after generation, when done right, when each generation is educated and done with intention. And this is how you can create this financial velocity that can literally last for generations. There are a lot of uses to utilize infinite banking, okay? In this context, we've been talking real estate quite a bit. You think of businesses, any kind of businesses. There's a lot you can do within businesses. Personal uses, personal financing, emergency funds, right? Retirement income, legacy planning, tax-free wealth transfer, generational wealth building. So many of us, so many people sit here and go, this is awesome. I want to do this one day. I hear it all the time. I want to do this one day. But I would encourage you to stop saying one day I'm going to do this and start. Make today day one. Change the way you think about your finances. It will change your life. And I promise, you implement stuff like this and you stick to it, you will wake up one day and be thoroughly amazed. A matter of fact, like most who do this and implement it, one policy doesn't become enough. They start one policy, and then as they go down the line, they're like, this is great. I need to start more. I need to put more money into my banking system. I need to insure my kids. I need to insure my spouse. I need to insure my business partners. There's lots of ways, and you can really turbocharge what you're doing. So as always, reach out, schedule a call with us. Let's find out what works for you and your situation. Everybody's situation is different. There is no one-size-fits-all approach. And we'll come up with something great that works for you that can last for generations.